Hi everyone, I'm Dr. Dana Mincer, owner and chief visionary at Love Health Direct Primary Care, where we provide concierge-style, holistic, and lifestyle medicine primary care services to individuals and employers. I'm also the host of this podcast, The Unfiltered Doctor, and we are entering uncharted territories unknown to other doctors. But if you are a CFO, a benefits director, or a business owner who offers a health insurance plan to your employees, I have a few questions for you. Questions that might change the way you think about the healthcare and the money that you spend on it. Okay? So, question one, what is your healthcare utilization? I'm going to leave that right here. Your health insurance is simply one way to pay for healthcare. It's not the only way, but every month you and your employees are paying premiums, correct? So, what's my next question? When was the last time you saw a detailed report showing where those premium dollars were spent? Think about it, right? If you're a CFO, you would never go a month without reviewing your company's financials. Yet, with healthcare, which is often a business's second or third largest expense after payroll, right? Many companies don't look at the numbers at all. Why? Now, do you know how much was spent on radiology last year? What about on specialist visits, on primary care, on urgent care or ER visits, on hospitalizations and surgeries? And importantly, how much went straight into admin fees? Yeah, you heard me, administration fees. If you don't know, then you're essentially writing one of your company's biggest checks every month with your eyes completely closed. Question two, what are you really paying for care? This is where it gets interesting, okay? What are you really paying for care? So let's take imaging. A typical MRI billed through insurance is like $3,000 to $4,000. But if you walk into a local imaging center and pay cash, that same MRI is $400 to $500. Yes, that includes the radiologist interpretation. I work with these imaging centers. Or orthopedic surgery, right? Did you know that a total knee replacement billed through insurance can run anywhere from $45,000 to $68,000 or even more? Yet the self-pay cost at transparent surgery centers like the Surgery Center of Oklahoma is about $19,000. And that price includes anesthesia and physical therapy. At another specialty surgery center, it's $19,300. That's less than half the cost. And you're getting the same surgery, often with shorter wait times and more personalized care. So here's the kicker. It's not that physicians are making more money in those higher billed insurance cases. In fact, it's quite the opposite. Let me assure you, it's quite the opposite because I was once in that system. Every year, providers are being reimbursed less, actually, and the difference in cost isn't going to the doctor or the hospital, it's going to the middleman. So, let's talk about the middleman problem. Man, I hope I don't. If you don't see me after this, you'll know why. Insurance companies are legally allowed to keep 15 to 20% of premium dollars for administration, okay? But because of loopholes, they often keep more. How is this? There are loopholes, voila. By categorizing executive pay, broker commissions, and even lobbying as expenses, this is how they do it. That they can skim more off the top this way. So, I just want you to understand these numbers. Just look at these numbers. Okay, ready? In 2024, Blue Cross Blue Shield reported spending $27.4 million in lobbying. United Healthcare reported, these are self-reported, $7.5 million. Cigna spent $8.25 million. Humana spent nearly $5 million. And those are just reported figures. Let that sink in. If you're a self-funded employer, but you're still using a large carrier as your third-party administrator, you may be paying even more in hidden admin fees because those plans aren't bound by the same regulations, like the 15 to 20% rule. So that makes it even worse. So let's talk about primary care versus urgent care spending now, okay? How much are you spending on primary care services per employee each year? And how much on urgent care? Most employers, for example, spend far more on urgent care because employees can't access their doctor when they need. So what happens? They go to urgent care, or if it's after closing hours, they go to the emergency room for things that could have been handled with a quick phone call if they could have just gotten a hold of a doctor that knows them. So at Love Health, we flipped this model and we offer services for just $89 per employee per month. And your team gets direct access to a concierge style physician. That means same day appointments, longer visits, and even after hours calls and texts. And we keep people out of the urgent care. And from my years working urgent care, and I worked urgent care for a long time, I can tell you that 99% of visits were preventable if only that patient had been able to reach their doctor that knows them for a quick 5 to 10-minute conversation. That's it. Just someone that knows their history. And this is part of the reason why I built Love Health exactly the way that I did. So when employees have access to that kind of care, you see urgent care visits plummet, ER visits plummet, and overall health outcomes improve. Next, we need to address the transparency in healthcare costs. Okay, so let's pause here and ask a simple question. In what other industry would you buy a product or a service without knowing the cost up front? Would you walk into a grocery store and fill your cart and walk out without checking prices only to get a bill 3 months later? I mean, I know I'm not the best at checking prices when I go shopping, but would you invest in marketing without knowing what it's going to cost you? Yet, that's exactly how healthcare works in the insurance model. There's no prices, there's no transparency, and a bill months later that often makes no sense. So, I mean, that's really why we've been building something different here in the Philadelphia area. And I've been heading this project. At Love Health, we're compiling a database of real self-pay prices directly from providers. We've already partnered with 2 imaging centers, several specialty groups, and our goal is full transparency because transparency is the only way to stop the runaway premium increases. And that leads me to my next topic, which is the myth of rising costs. And I say the myth on purpose because we need to address this big myth. You've probably been told that premiums are going up because healthcare costs are rising, right? Higher drug prices, higher hospital prices, more expensive diagnostics, physicians need to be paid more, but that's all bullshenannies, okay? That's just not the whole story. I was lucky enough to be able to attend the Health Rosetta Conference just a few weeks ago in Denver, and employer after employer presented case study after case study showing 20, 30, 40% savings after redesigning their health plans. And these were not large corporations. They were small and medium-sized businesses, just like me and you, okay? They cut out the middlemen. They provided direct access to primary care, and they created transparent networks for surgeries and imaging. Employees got better care. They got more freedom to choose their providers, and employers still saved millions. So, I mean, why does this matter for small and medium-sized businesses? Well, this is where it gets pretty personal for me, at least. I grew up in a small family business, and I watched my parents, they built this business from scratch. I watched them care deeply for their employees. I've seen them buy cars for a single mother employee when theirs broke down, helping to pay mortgages for their employees, providing generous benefits. I mean, these were loyal employees who stayed for decades with my parents. But as the insurance premiums rose, my parents could no longer cover employees fully. So employees had to start paying more and more out of pocket, and it created a situation of distrust. And I see this happening everywhere today, right? Small and medium-sized businesses want to take care of their people, but they can't compete with the benefit packages of large corporations. And yet, these are the businesses that are rooted in our communities. They care about their people. They care about the local economy. They live in this local economy. They exist in this local economy. So I ask you, what could you do if you saved 30% of your healthcare spend? Could you hire more people, increase wages, expand your business? support your local community. These are just some of my ideas, at least. And what if you could provide your employees with concierge primary care plus a transparent, affordable coverage model so they know that in emergencies or like large cost situations, their family is protected? Let's talk about the go-giver philosophy. And I'm going to close with this. The brokers and advisors who help businesses build these kinds of plans don't make as much money as they would selling commission-based traditional products from big insurance carriers. But they do it because it's the right thing to do. And I've heard that over and over again from these brokers that converted over. And that's the philosophy that I share. We can be successful in business while also creating win-win solutions for employees, employers, and communities. At Love Health, we believe in compassion, transparency, and better care for less. And we believe in standing together to take the greed out of the equation, because when we do, everyone wins. Thank you for listening. I appreciate your time. Have a wonderful evening. I am Dr. Dana Mincer, and this is the Unfiltered Doctor podcast. My mission is to make healthcare transparent, from new advances to real costs. So if that matters to you, please take a second to subscribe and help spread the word.